Okay, hello everyone. Thank you for joining us today on your Saturday. My name is Wari Giada, and I will be your moderator for today's session. We have a webinar presented by the Chennai chapter. I am Director of Community Relations. I have oversight of international and U.S. operations for our chapters and councils. And I'm part of IMA Community Relations team. Been working at IMA for almost a decade. Just some quick housekeeping items before we begin the presentation. Please note that you are muted upon entry to preserve the quality of the call. We want you to please use the chat feature or raise your hand to ask questions. And we will have a dedicated Q&A section towards the end of the presentation. So if you have any questions regarding the presentation, I will ask that you wait until we arrive at the Q&A to post them. But in the meantime, if you're experiencing any technical difficulties, please do send me a message through the chat feature. This is a CPE webinar, so you must attend the full presentation, answer a few polling questions to make sure you are still participating. And optional, you can complete an evaluation form at the end of the session, which will pop on your screen. I just want to say real quick that if you are joining us on a smart device, such as your phone or a tablet, you may not be able to participate in the polling question, meaning seeing the question and submitting your answer through the poll. In that instance, that's fine. I just ask that you submit your answer to the chat feature or Q&A, and you will receive CPE credit. I urge you all to pay attention to the presentation and not so much worry about participating in the polling questions. It's just to make sure you still engage. If you do miss one or here and there, it's okay. Please focus on the presentation. So now I would like to pass it on to Ganapati, who is the chapter president for the Chennai chapter, for some opening remarks. Ganapati, welcome.
Hello, am I audible?
Yes, we can hear you, Ganapati. Thank you.
Good evening to all, and welcome you all for the IMA Chennai chapter webinar. Myself, K. Ganapati Subramanian, President of Chennai chapter. I really appreciate the participants and the attendees during the COVID-19 quarantine time. I request everybody stay safe and enrich your knowledge. I really appreciate the IMA for taking care of its members by conducting this kind of free CPE seminars, which is really good. I'm really proud to be part of IMA. I also thank Ms. Vor Deota, Director of Community Relations of IMA, for coordinating such nice CPE program, even in the odd hours of US timings. Thank you very much. Today's webinar is on the subject everybody knows, that GST law and the practical application. The seminar will provide a good knowledge about Indian indirect tax laws and also its practical applications, which is more important for the Indian professional, those who are working under these laws. Today's presenter is Mr. Vinay, who is a qualified Bachelor degree of Commerce and also a partially qualified CA and pursuing CMA. Mr. Vinay has more than 10 years of experience in variety of law firms and Big Four companies in the area of indirect taxes. He is having a vast consultancy experience in indirect tax for the past 8 years. Presently working with M.K.Dandeker Co, handling the indirect tax practice. So everybody, we are going to get benefited from his very good knowledge on the GST, and we will welcome him for this. And once again, I thank you all and welcome you all. Handing over to the moderator. Thank you, Var.
Thank you, Ganapati, for this incredible introduction. Vinay, you on?
Yeah.
Great.
Okay. Uh, Hello. Good evening, everyone. I'll be presenting on the topic chosen by IMA, GST, practical application, and the law. Indirect tax has gone through several changes in the last 3 years, and GST has, since it was implemented in July 2017, we've seen it grow, and here we are today during these times discussing about the subject. I would like to thank the IMA Chennai chapter for choosing me to share some of my thoughts on the subject. I have tried to cover various aspects of GST in this particular presentation since one cannot singularly pick a particular topic and not choose to, you know, make it in sync with others, since some of you all who must be aware about the local GST tax laws, it's divided into chapters and there's a particular flow. Like any other act, definitions are under section 2. And so I'll just start with my presentation and probably we'll try to cover as much ground as possible in the next 45 minutes to 1 hour. So the practical application of this particular law is through acts, rules, notifications, circulars, orders, and some judicial pronouncements, which includes advance rulings, High Court judgments, Supreme Court judgments, and the tribunal judgments as well. Correspondingly, apart from the central tax laws, you have the state and the union territory tax laws. There are a couple of websites which help us engage with this particular tax law, and there's a particular dashboard through which we do our compliance, which is nothing but gst.gov.in. And the rest of them are informative websites which keep uploading on a regular basis what the taxpayer needs to be informed of. So, for the beginning, we'll speak of levy and collection. So, chargeability section. Unlike VAT or service tax or excise, in GST, tax is charged under as per supply. So, whenever there is a supply of either a goods or a service, tax is being levied, the tax being GST. Supply is having a very broad definition and it includes various phenomenons. So some of it include transfer, barter, exchange, license. But nevertheless, the important part of all these activities, eventually all these are verbs, which so whatever was there in the earlier tax regime and now what is there in this tax regime have been consolidated into one and tried to come under this particular definition. And this is the base with which we start our analysis of a particular business transaction in deciding whether it's a supply or not for this particular transaction to be looked upon with respect of the purview of GST. So I'll just read bits of the particular section in order to give some glimpse of what it is. Supply includes all forms of supply of goods or services of both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made for a consideration by a person in the course of furtherance of business. So basically the critical aspects being this particular verb, which I suggest has a list of them in that definition. It should be for a consideration which could be monetary or non-monetary, and it has to be in the course of furtherance of business. It's not any sweetheart's game. It's supposed to be business. It has to be an exchange. There has to be consideration. Consideration's form is questionable. It need not be money as such. It could be money's worth. Nevertheless, the important aspect to be considered is that it's supposed to be agreed upon between two parties who are getting into that particular agreement to, or that contract, as you may say, as per Contract Act, to carry forward business. There is a levy of central tax as per CGST Act, and then there's a levy of IGST Act, Integrated Goods and Service Tax, IGST, as per IGST Act 2010. So to reduce the burden from the unorganized sector per se, there is particular composition levy which is broadly covered under Section 10 of this particular act, wherein if a particular taxpayer's turnover is not exceeding a threshold, which currently is 1.5 crores, he has an option to pay tax at a reduced rate. So next, coming to exempt supply. Since supply in itself is just the beginning, I'll probably just move to my next slide and come back to this. So if you notice, I've tried to arrange a particular sink where a particular person, a taxpayer, starts taking an particular business transaction. It starts with the transaction. We choose whether it comes under the definition of supply or not by applying the principles as envisaged in the definition. In the definition, apart from what I read, there are certain schedules which consist of an inclusive list as well as an exclusive list, as in what are the items that are excluded out of the scope of purview of supply. There are certain items which are outside the scope of the act itself, like petrol, alcohol. Apart from that, there are certain specifications which are mentioned in the schedule. After we determine whether it's a supply or not, we move on to the next question which pops into our head, which is what is the type of supply? So in determining the type of supply, we try to understand whether it is a taxable supply or an exempt supply, a nil rated supply, a zero rated supply, or a non-GST supply. So basically, a taxable supply is one where tax is going to be levied on that particular supply. An exempt supply is one where it's exempted by a notification. A nil rated supply is one where the goods or services that are in the point of discussion have a zero rate attached to it. The rate of that particular product or service is zero. Zero rated supply is nothing but your export of goods and services and including supplies made to the special economic zone. So in a structured manner, we proceed. The next step that we go on to is determining whether it's determining the location of supplier and place of supply, considering these two elements in order to ascertain the type of tax. What are the various type of taxes? CGST, SGST, IGST, and UTGST. UTGST is nothing but your Union Territory Goods and Service Tax. So now, before I proceed further, I think it's time we take a first polling question. Word.
Thank you, Vinay. And we have arrived to our first polling question. Again, if you're joining us on a smart device, you may not be able to participate in the poll. If you're just calling using your phone, you may not be able to see the question. So I'm going to read it and helping you participate. The question is, GST is levied on, and I'm opening the poll right now, sale, income, or supply. Again, the question is, GST is levied on, is it A, sale, B, income, or C, supply? You have 5 seconds left to submit your answer. Oh, I can tell you, Vinay, there is one that's more popular than others. So let's see what the final results are. I am going to publish that, and thank you everyone for submitting your answers to the chat feature. And as you can see, most people went with C, supply, and I see similar results in the chat feature. Are you surprised by this answer, or was this what you were expecting?
I'm glad after a heavy lunch, people are paying attention.
That's great. Okay, so I am, I'm just trying to give you back the presentation so you can keep going. There you go.
Yeah. So I'll continue from where I stopped. Since in that particular structure, the location of supplier and place of supply determine the type of tax, and I was telling you about the various types of taxes. Location of supplier is the person who is rendering the service or selling the goods, right? Place of supply is not solely dependent on your recipient or where the goods are being transported. There are certain specific provisions laid down. in the IGST Act in order to ascertain the place of supply. So place of supply again varies from whether the location of supplier and recipient both are in India or either of them is outside India. In that scenario, it varies. So an intra or interstate supply is something that is to be determined. Interstate supply is where one of the element is within one state and the other element is outside the state. That is, the place of supply could be in another state. Intrastate supply is where both the elements are in that particular state and they are leviable to CGST and SGST or UTGST as the case. And in the case of interstate supply, IGST is leviable. The rate of tax determined on goods or services is determined as per the particular tariff, as per the notification which was introduced in 2017 by in the month of July itself, and after that it has gone through several changes. There were schedules, so the rates being 5, 0, 9, 9 and 9, 18, 6 and 6, 12, 14 and 14, 28. So 0, 5, 12, 18 and 28. These were the rates, and for few items there's 3%. So the rate of tax again is based on HSN code as well. The particular good or service is classified under the harmonized system which was existent in the service tax. It had SAC, Service Accounting Code, and in excise and customs tariff act, you had these particular HSN codes which allowed particular products of different nature to be classified or grouped appropriately, logically. That's how rate of tax is being determined. The next step is, once you're aware that you have the business transaction that you've gotten into amounts to a supply, it tantamounts to a supply, you determine its type, you determine whether it's an intra or inter, you determine whether it's a taxable or zero rated, or as the case may be, you determine the rate of tax, and finally you raise an invoice to your client stating, please pay me the money, and you charge him the tax and describe the particulars. There's a particular rule which needs to be adhered to. It's a procedural compliance that the rule should consist of certain essential details in order for exchange to be easier, in order for recording to be easier, in order for audit to be easier. But then it's just a procedural requirement. I'll tell you why I use the word procedural requirement and emphasize it in my coming slide. Then we declare it in the return. Declaring in the return is being really burdensome for taxpayers. Since this has become a monthly process, I understand the expectations of the law to be one nation, one tax, one return every month, and it's going to be easy. But I know for a fact it has been challenging and it is time consuming, especially for the unorganized sector, whether they concentrate in compliance or they concentrate in business. It's become a big question in their minds. And with the GST and portal suffering, many a times due to that or the incapabilities, they are trying to cope. We'll come back to the challenges of GST in a bit. So GSTR 1 being the return to be filed for declaring the outward supplies rendered by you as a taxpayer, and GSTR 3B, which is a payment summary after utilization of your input tax credit on a monthly basis, you remit your tax. That is how it works. The return. The USD 10, which has now been extended for GSTR 1 and 28 for GSTR. However, in the recent past, again, this also has undergone changes, and the GSTR return has been scattered based on states, based on turnover, and it's challenging to remember which return has to be filed when. There is a grace period of 2 days, 20th, 22nd, 24th. These are the 3 days allocated for GSTR 3B, depending on which state and what's the turnover that you have for a particular finance. This also was an idea to curb the traffic on the particular portal so that people are in a position to file returns on a regular basis to avoid interest, late fees, and adhere to compliance. Payment of tax dues, and then we move on to electronic cash or credit ledger. So in GST, since it's more automized and there's visibility of what is the cash inflow and outflow, the credit inflow and outflow, all on a single dashboard with these particular two ledgers available, visible to you on site, it makes life very easy. The point is you can pay your taxes by either credit, that is the credit that you receive upon the expenses incurred by you. It's called input tax credit, and cash is the cash that you deposit through your check, challan, and it's available to you on the portal, and based on that you pay your tax dues. So moving on to my next slide, this is just a flow which I thought I'll equip you all with. Let's get into the nitty-gritties of input tax credit. Input tax credit means in credit of input tax charged on supply of goods or services. So all the expenses that a particular business incurs today have the capacity of on which credit can be taken, provided there are certain conditions to be fulfilled. This allows reduction of tax outflow through cash for the taxpayer. And unlike in earlier tax regime where credit of service tax was allowed to set off either excise or service tax dues because it was a central levy, and VAT was input tax credit of VAT was allowed to set off the output tax dues of VAT in that particular state since it was a state levy. Now that both of them have been combined and unified, and a lot of other expenses apart from the specific product which is being purchased or manufactured, there are other expenses on which credit is available depending on whether the procurement was from a registered taxpayer. So IGST is levied on import of goods and credit of that can be taken. But then one thing what I would like to highlight here is that import of goods is covered under Customs Act. Why? Because it's a customs levy, import, basic custom duty, and IGST is an additional tax under Customs Act. And the credit of that can be paid upon payment after receiving the bill of entry, which is a valid document, and of course, the goods need to be in use in the course of furtherance of business. There's a lot of repetition of the wordings in the course of furtherance of business. Business in itself in GST law has been defined exclusively, and it consists of many aspects. I'll just try to cover few of them so that there's an idea. A minute. I'll just be back in a second. Yeah. So business includes trade, commerce, manufacture, profession, vocation, wager, or any other similar activity, whether or not for its pecuniary benefit. Any activity or transaction in connection with or incidental or ancillary to subclause A, which was the one that I read, and admission for a consideration of person to any premises, provision by a club, association, society, or any such body for subscription or any other consideration of necessity or benefits to its members, supply or acquisition of goods, including capital goods and services in connection with commencement or closure of business, services provided by a race club by way of totalizer or a license to bookmaker in such club. So these are some of the aspects of business. It's exclusively defined in the particular act, and if the expense that we incur is in the course of furtherance of these particular aspects, then we are allowed to take credit. Tax also is being paid on under reverse charge mechanism. I'll come to reverse charge mechanism. I've covered it in further slides. But the thing is that credit of this particular tax portion which has been rendered, and it's to be rendered by cash. Mind you, it's very specifically to be paid by cash first, after payment, after deposition and debit in the electronic cash ledger. Let me be specific. Post that, credit can be credited to your electronic credit ledger of this particular tax portion on which tax had been paid under reverse charge. ITC, as I call it as an abbreviation, input tax credit, is available on inputs, input services, and capital goods. So this is the flow when you address aspects of input tax credit. There is eligibility, which I'm coming to in my further slide with respect to the conditions. Then there is availment, and then there is utilization. What do I mean by availment? By crediting it to the electronic credit ledger in the GST portal while filing your GSTR 3B, which is a monthly return. Utilization is nothing but by ensuring you debit that amount that has been credited towards your tax dues. So these are the conditions to be fulfilled for considering that particular expense, the ITC on that particular expense, whether it's eligible or not. This was my first aspect that I'm going to cover, and these are the conditions. But before that, Vor, can we go to the next polling question? Vor?
Yes, Vinay?
Yeah, can we go to the next polling question?
Oh, the sound just broke there. Give my apology. Give me a second.
Yeah.
Okay, great. I hope everybody can see the second polling question, and I'm going to read it for those who are unable to participate so they can submit their answer via the chat feature or Q&A. IGST is payable when location of supplier is Chennai and place of supply is Chennai. Is that A, true, or B, false? The poll is now open, and I'm going to read the question again. IGST is payable when location of supplier is Chennai and place of supply is Chennai. Is it A, true, or B, false? That's a very good one because I do not know the answer, and I'm very, very curious to see what our participants are thinking. Okay. The poll is now done, and I'm going to publish the answers. Vinay, majority chose B for false. I'm hoping they're right. Could you explain, if it's correct, why is it correct?
Yeah, sure. That's very nice. It's because IGST is a tax to be paid on interstate supplies, and IGST is not to be considered in this particular scenario. That's nice.
Oh, okay. Great. I'm just having a hard time here giving you the ball back. Okay, all right. You should have it now, and you can switch back to your presentation.
Yeah. Yeah. So we'll continue with the conditions to be fulfilled on claiming input tax credit. As I had mentioned earlier, the intention of the particular expense that has been incurred is to be in the course of furtherance of business. There has to be a possession of a valid document, the receipt of good or service. There has to be payment of tax dues, and the return has to be filed by the tax. Now, as you can see, return filing has gone through a lot of changes. The last condition, filing of return, wherein initially GSTR 3B was not considered as a return under Section 39. There were particular High Court judgments like AAP and versus the Charter Accountants in Gujarat. AAP, I think, was the Charter Accountant firm, and they fought against the Gujarat High Court, and it was clarified that GSTR 3B, the filing of GSTR 3B cannot be determining whether ITC can be claimed or not because it's not a specific return under Section 39. What is Section 39? 39 speaks about return filing and payment of tax dues through that particular return, which was initially supposed to happen through GSTR 3, which is not yet come into picture. Similarly, GSTR 2 has not yet come into picture, which was to speak about the input tax credit. It was a return on those aspects. Now, after that, the 3B had become a particular return under Section 39, and therefore it became mandatory that eventually, if you're supposed to take credit of that particular expense, it has to go through your 3B. That is, it has to be credited in your electronic credit ledger when you're filing your GSTR 3B. After that, there was another change, a significant change. Until this particular point of time, the industry tax was being taken based on self-invoicing, based on understanding of whether that particular expense ITC could be claimed or not, based on receipt of goods, receipt of service, and the invoice in itself, and payment to the particular vendor. The condition that was imposed, which I'm speaking of recently, was that there has to be matching done between GSTR 2A and the GSTR and the books of accounts. That is nothing but the invoice based on which we are claiming the input tax credit. The reflection of that has to be there in GSTR 2. And to add confusion, the cherry on the cake, the government decided to ensure that there's a privilege being given to the taxpayers of 20% of eligible input tax credit, which is visible in GSTR 2A. Let me expand. Say, for example, you have 1,000 rupees as input tax credit in your books of accounts for all your goods or services, and in GSTR 2A, once you go through the list of expenses and the vendors who have filed their returns, you realize that the value of eligible input tax credit is 700. On 700, the privilege given was 20%, which means 140, 840. So for the value 300, in the next month, one had to be careful to ensure that the 140 taken earlier had not been taken, provided that the return for those invoices amounting to 300 were filed subsequently. Then they brought in another significant. They reduced the 20% to 10. Now, thanks to quarantine, they have mentioned that this particular clause need not be adhered to till September, which is a big relief for the taxpayers, because it was very time consuming to follow up with the vendors, ensure compliance, ensure that they were filing returns. So this has been eased off for the at least next 6 months. The another important aspect which I would like to discuss here is Section 16(2)(c), which speaks about payment of tax dues. This particular condition, even though has been slightly ignored or not adhered to as such, it is a very tricky one, since it exists in the particular subsection of the conditions to be fulfilled for claiming tax credit. It speaks of the payment of tax dues to be done by the person who is receiving the tax from the recipient. So, in this particular manner, it is very practically difficult for me, as supposing I am to determine whether the person who has rendered to me a good or service has deposited tax with the government. There is no visibility of that in the portal. I only have to trust him based on my personal relationship or professional relationship, or the visibility that I have of his past track record, and or I can probably ask him to show me his return working, which no one in commercial terms would want to do. So this condition is going to bring in a lot of litigation, and it's going to cause a lot of problems for some of the taxpayers. However, there's also another condition wherein the value of the tax and the value of the supply, that is the taxable value of supply. So what is tax charged on? It's charged on value of supply, which is determined based on valuation rules, which is covered under Section 15, which has certain inclusions and certain exclusions. For example, discount is excluded. Anything monetarily that is provided by the recipient is added to the value of supply, and tax has been offered on that particular base price after adding and subtracting, as I mentioned. Apart from some of the important exclusions are a subsidy received from government, and certain aspects of these are based on the earlier tax regime as well. So, as I was mentioning, that this particular tax amount needs to be deposited with the government, and there is no visibility of that. Hello, am I audible? I read a message where the voice is breaking. I hope this is better.
Yes, we can hear you fine. It really depends on the person's internet connection, so we apologize about that, but I can hear you fine.
Okay, thank you, Ward. Please do let me know if there's an issue. I got a couple of messages, so I react. Thank you. Yeah. So moving on to my next slide, which speaks about unavailable credit of input tax. So input tax credit is not available in certain circumstances. What are these? These are specifically laid down under Section 17, and these are addressed to as block credit. What do you mean by block credit? Block credit is something which is nothing but as you receive an invoice and you notice expenses and it has to be expense of also. So normally, say for example, when a journal entry would be expense CGST SGST, which is an input tax credit, which is to be credited and be considered as an asset to the party who has been, rendering this goods or services. Normally, this would be the entry 100, 6, 6, and 112. So apart from that, if in this case there's block, the credit is blocked, it would be 112, which means expense would be credit, the amounting would be 112, and the party would be 112, which means no amount of the particular tax portion is going to go towards the asset account. Some of the examples like I could mention are motor vehicles or food and beverages or repairs to that particular motor vehicle, health insurance for employees. All these are expensive, or anything that is personal in nature. All these are blocked. And specifically, there's a list: goods being lost or destroyed. And so, coming to the next aspect, ITC reversal. ITC reversal is nothing but it has to be reversed if payment has not been done, for example, within 180 days. It has to be done, the entire portion, value of tax, like I was mentioning, taxable value of supply and the value of tax. Both these amounts put together within 180 days from what? From the date of tax invoice need to be remitted to the particular party in order for him to remit it to the government. So this is the window in which this needs to happen. Otherwise, the credit on this, which had been claimed by us as taxpayers, will have to be reversed. This is one type of reversal. The other type of reversal is when you have different type of supplies being rendered by you. Exempt supply, taxable supply, for instance. So on the basis of a particular turnover ratio, the credit on the exempt supplies will be reversed. Say, for example, 100 rupees is your exempt supply turnover. Your taxable supply turnover is 400. So 500 is your total turnover. Your input tax credit, which is eligible after eliminating those expenses which are exclusively considered as block credit, and after fulfilling all those conditions that I mentioned in my previous slide, section 16, that will be multiplied by 100 by 500, say for example 50. So in that particular case, only proportionately 5 times it over 10 rupees, that is, will be available to be credited to your electronic credit ledger. This is about ITC. I bore, probably we can go to our next question before this.
Thank you, Vinay. You are sometimes breaking up, so I would just ask if you could maybe speak a little bit slower. Some of the members have requested that, the participants, if you don't mind.
Yeah, sure. I'll keep it in mind.
Great, thank you. Okay, our third polling question is, taxpayer can pay the tax dues from, and I'm opening the poll right now, A, electronic cash ledger, B, electronic credit ledger, or C, both. I am going to repeat the question for those who are unable to see it. taxpayer can pay the tax dues from A. Electronic cash ledger, B. Electronic credit ledger, or C. Both. You have few seconds left to submit your answer, and I am curious to see what everybody thinks. Okay, I think we have people stop participating now. I'm going to apply the results. It looks like a big majority went with C, both. Would that be the case, Vinay?
Yes, that's absolutely right. Great.
That's great. That's great. Okay, uh, giving you back the presentation.
Okay, I'll just do a small check. I hope my voice is much clear now.
Yeah, it just comes and goes at times. But if you do pace a little bit, I think we'll be fine. Thank you.
Thank you.
If you could switch the presentation, thank you.
Yeah. So the next aspect that I would like to cover is reverse charge mechanism. Reverse charge mechanism is a mechanism wherein a particular taxpayer, being a recipient, will have to pay tax dues instead of the supplier. So this is covered under Section 9, wherein the services are notified and only those specific services like legal services and import of services, motor vehicle, these are some of the services which are to be paid under reverse charge mechanism. GTA, which is a very popular expense, goods transport agency, that is. These are the director's remuneration. So all these expenses are to be paid, GST is to be paid under reverse charge mechanism. Like I had mentioned earlier, input tax credit, if it's eligible, can be claimed on tax paid under reverse charge mechanism. This has to be specifically filled in a different column while filing the return under the section inward supplies liable to reverse charge. And tax needs to be paid specifically only through cash. What are some of the challenges that are being faced by the industry currently? So one major challenge which the industry is facing is to cope up with the compliance. The GST annual return and audit, for example, it for the financial year 2017-18, it went through 6 to 7 extensions. This gives a clear picture that the portal in itself, the utility, the GST and network in itself was not ready. The makers of the law who had prepared the annual return and the audit report under the reconciliation statement of GSTR 9C made sure that the form was simplified at a very later point of time after listening to grievances and requests from the various bodies. So, but on the positive note, there are what do you say issues being addressed by the government, but it's happening at a pace with which the taxpayers may not be happy. It's happening at their own pace. Now, say for example, even the interest liability. Interest liability was to be borne on the gross liability or under Section 15 of CGST Act 2017, which speaks about interest. Since its wording was not exactly clear, it was born to litigation. It had caused a lot of problems, and there was views that it will be taxed on the whole tax liability without considering the particular input tax credit. But now, due to the 39th GST Council meeting that had happened very recently on 14 March, it had been announced that retrospectively, that is from the inception, interest would be levied on the net tax rate. So there are the GST Council, which is framed using the state ministers, state finance ministers, and a healthy mix of central finance minister, the central team. It's an independent statutory, functional body who's looking into aspects and learning with time, with the help of analyzing what are the mistakes or loopholes in the law and trying to rectify them. Say, for example, the earlier slide where I mentioned about the amount to be reflected in GSTR 2A of the tax credit, they issued the notification, they made changes, they issued circular clarifying issues, which means in the first go when they want to communicate something, it's not specifically covering all grounds. That is why there is a need for improvement. There is need for circular to be issued on a recurring basis in order to cover wholesome ground. So this is one problem with respect to compliance. There are still certain litigative topics. For example, the recent advance ruling on directors' remuneration, where salary paid in form of consideration, which is in the Rajasthan High Court in the case of clay craft, it had been held that tax had to be paid under RCM, but so long we were of the view that it had to be paid only on if the director was rendering service in a different capacity apart from being an employee to the organization. So there are loopholes in the law. E-way bill, for example, it's still trying to cover ground and trying to become a useful tool for the industry, but then the goods could be described wrong, which could be creating a confusion when inspected. So these are some of the challenges. I'm sure I can't cover all of them, but definitely these are some of the challenges. E-invoicing, which is to be coming, supposed to come by April, now it's coming by October. But that is again for the big multinational companies. I think GST is concerned. The problem mainly is with the unorganized sector because they have to face a lot of time and effort in compliance and they have to understand a lot of aspects. And input tax credit, even though it's available, GST being a tax on value addition, supposedly to eliminate cascading effect. Eventually, the core idea is there is an amount as it increases, the end consumer he is facing the brunt. So even though it's one nation, one tax, the end consumer, the cost is increased for the end consumer. And eventually, there are so many returns that need to be filed, so much documentation to be done, so much interpretation to be done. And eventually, with time, as the government and the lawmakers, the GST Council, is learning and improving, we as taxpayers, analysts, consultants are learning about the law. Move on to my next slide. Relief with respect to GST compliance due to these quarantine period. So there is a lot of relief that has been given in terms of filing of returns. Like the due date has not been extended, but there is waiver of interest for the companies whose turnover is above 5 crores, for instance. They need not file their returns for 15 days from the due date, and then there's a reduction in interest for from 18 to 9%. By the way, Section 50, subsection 3 of 2000 CGST Act 2017, the maximum interest rate till now that has been notified is only 18, even though there's a possibility of 20. The other thing is that GSTR1, the late fees, is waived off for the months March, April, May, and the return could be filed by 30th June, which hopefully by that time we are in a position to work full-fledged, even though now we are working, but it's hashtag work from home. Apart from that, there are certain relief which is being provided with respect to a lot of LUT and those kind of compliances, eBay bill, and the High Court assessments and ruling and applications to be filed, refunds. So in those aspects, a lot of ground has been covered and time has been extended till 30th June. Various circulars and notifications has been issued with this respect. Apart from that, in these particular times, the major highlight would be the GSTR 2A reconciliation, which need not be done in this particular period till September. So there is enough input tax credit available for the assessees based on their books of account and fulfillment of other sections that they can claim and not wait for it to appear on GSTR 2A. So as I can see, the compliance has been reduced and relief has been provided to the taxpayers. as I'm nearing the end of my slides and my presentation, I'd like to summarize my experience working in indirect tax for the past few years and my analysis of what has been the change so far and what has been learned over the period of time. So one is that there is a extremely deep learning curve since what I read yesterday becomes irrelevant tomorrow for the industry. There are specific nitty-gritties which need to be adhered to, and there is a particular churning which needs to be done. I think I've become more patient by practicing this tax law because it requires that amount of patience to be with it, to stick to it, to understand the difficulties of implementing such a complex law, even though, according to me, it has affected the unorganized SME sector the most, since they have a lot of increase in cost and time and compliance, and the end consumer is facing the brunt because of this. However, on a positive note, the government is trying to speak with different bodies and understand what are the changes that they can make and benefits they can give to the assessees with respect to FTP also, for example, SEIS schemes and MEIS schemes, and wherein tax portions, the scripts, relief from tax for certain industries, and reduction in tax burden, reducing tax rates for certain products depending on the industry that they operate in, and the compliance, for instance, GST audit had to be done only for those assessees which have a turnover of above 5 crores. So on a recurring basis, there are changes which are being made on different aspects of, let it be compliance, audit, interpretation, litigation. Litigation definitely is going to be there for aspects which are not covered. I couldn't cover a lot of ground in this short period of time, but I would love to. One, for example, intermediary service, 13 subsection 8 of IGST Act that determines the place of supply, and it says it's the location of supplier. The tax that need to be charged is technically CGST, IGST. But then because of the portal issues, we are able to charge only CGST, HGST. Why? Because section 7 and 8, which speak of determining intra or interstate supply, this particular proviso eliminates section 13. So technically it comes under IGST, but portal difficulty, we are able to file it only under CGST and SGST. So there are a lot of challenges in implementation and classification, the reclassification based on the HSN code. There are aspects which need to be understood. So even though it's not as simple as black and white, and there is a lot of gray area, but we see hope, and there are things that are improving as time progresses. With this, I would like to conclude my presentation, and I would like to thank Mr. Ganpati, who is the president of the Chennai chapter IMA, to give me an opportunity along with board for cooperating and ensuring there are no difficulties. I'm sorry if there were certain mic issues in between. I couldn't realize that because unless I was communicated to in between. Thank you so much for your time, and I hope all of you stay safe. I vote over to you.
Yes, thank you, Vinay, for a great presentation. Okay, we're now going to open up Q&A. Please send in your question to the chat feature. And here's the first question that I have for you. What is the scope of GST applicability of back charging of expenditure from head office to branch?
So this particular aspect is covered under cross charge. If there are different branches, then they could get registered under input service distributor. And if the expense actually is going to benefit the particular branch, then the credit should be passed on, and it should not be just a mechanism for passing on credit to a particular branch which has excessive tax dues, because that wouldn't be the intent of the law. Yeah, you can move to the next question.
Great. Thank you. Next question is, What is the scope of GST applicability for sales and purchase of goods or services between two entities under the same group?
Okay, so they are considered to be related persons, and related persons, the transaction is covered under Schedule 1 of CGST Act, which is considered to be a supply, even if it is not to be made with or without consideration. Hence, it's chargeable to tax.
Great. Does the current announcement for extension of March, April, and May GST to June due to COVID apply for both tax payment and returns?
Yes, that's right. It depends on the turnover of the assessee. If it's above 5 crores, from the due dates which were applicable till day, you have a grace period of 15 days. But if you don't have a turnover exceeding 5 crores, then you have time till 29th June, 30th June for a particular month, and 29th June for March, and 30th June for April, for filing GSTR 3B. So while filing GSTR 3B, that is when you do your pay. But for declaring your outward supplies through GSTR 1, you have time till 30th June. The late fees is waived off.
Okay.
Next.
Okay, so this is how is GST tax compliance work in transfer pricing?
Okay. So when a transaction is conducted between two related parties, one being in abroad, and the valuation has to be done in arm's length price with respect to TB laws. Similarly, here in India, or on that particular transaction, the value is to be determined based on Section 15 and the rules applicable, and it has to be in the arm's length price. If that particular rule does not apply, the residual rule applies, which speaks of the transaction to be valued as per the arm's length.
Okay, what is the scope of GST applicability in the CMA exam? Do you know?
I'm not 100% sure of that, but then I think Ganpati sir would be able to answer
Okay.
that. Definitely, it has a lot of scope
Hello?
in you being a citizen of India, because anything that you consume or sell, GST is going to be applicable. So being aware of the law, whether it's the basics or the complexities, is always being useful. It's an add-on. It's a value add.
I think Ganapati wanted to say something about that.
Yeah. Actually, this GST is not for the CMA syllabus or the examination. But whereas the professional, those who are working in India under the tax section, they should know about the indirect tax laws. So for them, this will be more useful. So that is the scope of GST applicability for CMAs. Hope I answered the question.
Great, thank you. Actually, Vinay, we didn't do the fourth polling question. Should we try to do it? People are asking about it because they want to participate.
Yeah, sure. Why not?
Sure, not a problem. Okay, here is the fourth polling question. It is payment of taxable value and tax ought to be made within how many amount of days from the date of issue of invoice for the recipient to not reverse the amount claimed as input credit. So the poll is now open. Is the answer 180 days, B 90 days, or C 30 days? Vinay, I think I was paying close attention when you were talking about this, and I think I know the answer.
That's nice word.
Well, let's see if I was right. I'll be honest.
Yeah.
Okay.
Unintentionally, you're learning GST too.
Great. Okay, I'm going to read it again for those who cannot see the question. Payment of taxable value and tax ought to be made within X amount of days from the date of issue of invoice for the recipient to not reverse the amount claimed as input credit. So is it within 180 days, 90 days, or 30 days? A, 180, B, 90, or C, 30? This one we got mixed results, so let's see who was paying close attention, Vinay.
Yeah.
Okay, so as you can see, many said 180 and some said 90. I am going to say A, 180. I heard you said that.
Yeah, that's the right answer.
Yay!
Okay.
Great.
That's
Great. Let
good
me
to
see
hear.
the
Yeah.
additional question. That was a lot of fun. Okay, we do have some question here. What entries made in I don't know if I can get this. What entries made in case of reverse charge? Do you understand?
What entries to be made in case of reverse
Yes.
charge? Is that the
Yes.
question? Okay, so once an expense is incurred, it's expense to the party for 100 rupees and the tax amount which is to be paid through cash. So therefore, the tax portion to bank, that would be your entry. It'll be two entries. And the third entry would be when you take the payment of that particular tax to your input tax credit. So therefore, ITC will be in the debit side. So that you credit it to your electronic credit ledger. It's divided into three aspects. I hope I answered that.
Yep, that was great. Let's see. Since GSTR2 is not available, where can we show the GST paid under RCM for claiming?
It's to be shown in your GSTR 3B return, wherein you have an aspect of ITC, and in that particular column, you have a separate classification to be made for inward supplies on which tax had been paid under reverse charge. Yeah.
Okay. And another question here is, can we account for a sale bill, which is one of the year from 2017, in the current month of April and changing the sale invoice date to the current year?
Okay. An invoice has to be issued based on a particular timeline that has been assigned for that particular task. So for that, it was, if it's a sale of goods, and it had to be at that particular point of time when the point of sale had incurred, or with respect to excise at the time of removal. So henceforth, you cannot backdate a particular invoice that was issued already.
Why GST is levied on supply and not on sale? What's the difference between supply and sale?
Okay, sale is an aspect that was under the VAT law. Supply is under GST. Supply covers all the transactions, including goods and services. Sale was extracted from Indian Contract Act, and it was mainly for goods. Service tax was covered under the Finance Act 1994. So since both of them got combined, the concept of supply came into picture. The word supply basically is, if you look at it, think of it, it's an action word, right? You can either supply a good or a service. You can't do anything else. Either you do an activity and earn money, or you sell something, a particular commodity which is tangible and earn. That's why there is supply in GST, which is similar to other countries as well. Yeah.
Okay, how does GST apply for work contracts?
Works contract. So works contract in GST is considered as a supply of service as per the schedule in CGST Act. Since it's considered as a service, the combined rate, whatever is applicable to that particular service. So generally, it's either construction of an immovable property, and it involves supply of goods and services on the entire wholesome activity. For example, your plant and machinery that you repair is something different. Your building reconstruction that you do, which is an immovable property, it's different. In your building, you have the materials and labor which are incorporated, and on the whole amount, tax is paid, and it's construed as a service, and the tax is applied based on the HSN applicable to that. And that is determined based on your type of recipient and type of supply. I hope.
How are dummy or false invoices handled by the GST officers? For example, GST collected but not paid by the supplier, for both customer and the supplier.
Okay, this is a particular challenge that is being faced by the government. That is why they brought up this GSTR 2A matching concept, there's a particular specific section under the Act which speaks about matching, wherein the invoice which has been declared raised to a particular party has to be declared specifically in the return. So that is why there's this matching concept for the government to keep track of fake invoicing and GST collected but not paid. So there is a particular bank account. There are a lot of ways in which the government scrutinizes and digs deeper and gets to the bottom of the particular transaction.
Mhm. Is there any GST certification course available in India?
Yes, there is a GST certification course available in India. The Institute of Charter Accountants of India, there's a IDT committee. They handle the GST certification course. They are considering, I think one will be very shortly, they'll be hosting. So if someone is interested, they can take it. Apart from that, there are private firms who do it as
Getting a lot of questions. We're just going to be able to answer two more just to be in respect of everyone's time. Can RCM paid on legal fees be claimed as ITC?
Yes, that's right. It can be.
It can be. Okay, great. Is GST applicable on out-of-pocket expenses, which is billed along with a professional fee?
Yeah, it's to be added with the value of supply. Anything that is to be added, it's an addition basically. It's a specific addition. Any amount, any activity which has a monetary value will be added, and that's it.
What are the penalties for the non-payment of GST? That's a very good question.
So the tax, if it's going to be paid late, you have 18% interest per annum, which will be calculated on the tax amount, and it has to be deposited in the board. So say for example, you're filing your return instead of 20th on 24th. Payment and filing of return both are activities in conjunction, which decide and declare that you have made the payment. So on 24th, in my example, for 4 days, you have to pay interest at the rate of 18%.
Okay, last question. ITC claimed under RCM is not reflected in the table for reconciliation between 3B and 2A. How can this be reconciled?
So it need not be reconciled because 2A is a reflection of outward supplies which are filed by the person who has supplied you goods or service, as the case may be. RCM is an expense which you incurred and you are going to pay the tax directly to the government. So you should be aware of your expense and the tax to be applied on that.
Great. Thank you so much. So, as a reminder, this is hosted on WebEx platform and not on 24, which is what IMA uses for the usual webinar. So, this is a manual process. You will receive your CPE certificate, and CPE will be uploaded onto your transcript within 1 or 2 weeks. So, we appreciate your patience. You do have an option at the end of this presentation to complete an evaluation form. It should pop on your screen. Again, if you are using a smart device, it may not pop. If you want to do that, you can just send an email to the community relations team at communityservices@imnet.org, and we'll send you an electronic copy. But it's optional. It's not mandatory to receive CPE. Again, I want to thank our presenter, Vinay, for an excellent insight, information on Indian tax laws. I myself learned a lot, so thank you so much. And also Ganapati, president of the Chennai chapter, for his great contribution and opening remarks. I want to thank all attendees for taking time on their Saturday to be with us today. And, while the COVID situation has impacted so many people, it's good to know that there are associations like IMA who are here to support our members. We are stronger together, and we are working together. I'm really seeing great collaboration between chapters, especially in the Middle East and India, working together to deliver, free CPE to our members from the comfort of their home. Just so you know, we are here to support you in your careers. So again, thank you everyone for your participation. We are going to share a copy of the presentation. We have the permission from our speaker to do that. along with a link to the recorded session. That will be emailed at some point next week. So again, thank you very much for your participation today. Have a great evening. Bye-bye.
Thank you.
Or,
Yes?
this is Ganapati again. Just some of them asked some of the questions in question and answer session. They can, if they want some specific questions, they can send it to the chennai@imachapter.org email. So we'll try to reply.
Okay, let me type it in here. So it's
I have put that in the chat. I have put that in the
you
chat.
did? Okay,
Yeah,
great.
yeah.
Thank you.
I'll put it again.
Okay, Chennai chapter at is it Chennai at imachapter.org, right?
Yes.
Yes, that's what I did. Great point. If you have additional questions, please do send it to the Chennai chapter general inbox. Thank you so much again for your time. Bye, everyone.
Thanks a lot. Bye.
Bye.